Hello, it's Thursday the 27th. I'm FxPlew and this is the market brief. Now, as I mentioned yesterday, the IMF changed its forecast for the UK economy. They now expect 0.4% growth this year instead of 0.3% contraction they forecast in the last global review. Now, far be it for me to suggest that Whitehall civil servants are better than the IMF economists, but perhaps the government was right to get so prickly and push back against the earlier forecast from the IMF. Granted, the UK will still stay in the slow lane of the G7 economic highway, where the US is still way out ahead with 1.8% growth on their top trump card, but at least we're not reversing up the hard shoulder with the hazards on. However, with an election on the horizon, it looks like Sunak will need a miracle to be re-elected, or the opposition may need to squander their comfortable lead in the opinion polls. Goldman Sachs has been on. They think that the Bank of England will hike by 50 basis points next week. They are a little contrarian here, as they're the only major bank forecasting a bigger rate hike to front load the remaining 75 basis points expected from the MPC. But their call does have merit though. Inflation remains stubbornly high, and remember, before the 50 basis points seen at the last meeting, the previous cycle of 25 basis point rate hikes have been pretty ineffective in slowing demand. Tune in next week to see the conclusion to that particular plotline. Over in the US, the Fed delivered the 25 basis point rate hike widely expected. That hike was more about stamping out inflation completely rather than a measure to bring the inflation level down. Powell's press conference explained that the Fed can afford to be patient as well as resolute when considering further rate hikes. He was pretty vague when he was asked when rates may begin to fall again, but it is unlikely that that will be this year. Market sentiment is that the Fed to have entered a hawkish pause now, where no further rate hikes are expected for the time being. As such, the Fed fund rate may have peaked at the 2.5-year high of 5.25%. The labour market is softening, so next week's non-farm payrolls will give a good steer on whether they can still achieve the soft landing they're hoping for, but the outlook is favourable. In the market, the dollar sold off on the rate decision. Sterling peaked around 129.80 against the dollar, and the dollar index lost a little ground, softening to about 100.70. We may see a degree of heightened volatility ahead of the MPC rate decision next week, but for now we kick off around 129.50 against the dollar. We're about 116.75 against the euro, and euro dollar is around 110.95 on the open. That's it from me. Have a great day.
If you do not have a clue, then just tweet through and ask FxPlew.